Hello, everyone. Welcome back to my channel, the Investing Iguana, where I share with you my tips and tricks on how to grow your wealth with smart investing. I'm your host, Iggy, and today I have a very exciting story to tell you. How I turned $1,000 into $100,000 with Iguana Strategy. Yes, you heard that right. I turned a measly $1,000 into a whopping six-figure sum in just a few years by following a simple but effective investing strategy that anyone can learn and apply. And in this video, I'm going to reveal to you the secrets of my strategy and how you can use it to achieve your own financial goals. But before we get into that, let me ask you a question. What would you do if you had $1,000 right now? Would you spend it on something nice for yourself or someone else? Would you save it for a rainy day or an emergency? Or would you invest it in the stock market and hope for the best? Well, if you chose the last option, then you're in luck. Because that's exactly what I did a few years ago. And boy, did it pay off big time. You see, I didn't have a lot of money back then. I was just a regular guy with a regular job and a regular income. But I had a dream. A dream of becoming financially free and independent. A dream of living life on my own terms and not having to worry about money ever again. And I knew that the only way to achieve that dream was to invest my money wisely and consistently. But I didn't know how to do that. I didn't have any formal education or training in finance or investing. I didn't have any mentors or advisors to guide me. And I didn't have any friends or family who shared my passion for investing. So I decided to take matters into my own hands. I decided to learn everything I could about investing from books, podcasts, blogs, videos, and online courses. I decided to experiment with different strategies and methods until I found one that worked for me. And I decided to stick with it no matter what. And that's how I discovered Iguana Strategy. A strategy that combines 4 common investing strategies that suit most investors. A strategy that is simple but effective. A strategy that is flexible but consistent. A strategy that is fun but profitable. And today, I'm going to share this strategy with you. I'm going to show you how I applied it to turn $1,000 into $100,000 in just a few years. And I'm going to show you how you can do the same with your own money. So if you're ready to learn how to grow your wealth with smart investing, then buckle up and get ready for the ride of your life. Because this video is going to blow your mind. But before we get into that, please make sure to hit the like button and subscribe to my channel if you haven't already. It really helps me out a lot and it motivates me to keep making more videos like this for you. Also, don't forget to turn on the notification bell so you don't miss any of my future uploads. Alright, let's get started. But before we get into that, please make sure to hit the like button and subscribe to my channel if you haven't already. It really helps me out a lot and it motivates me to keep making more videos like this for you. Also, don't forget to turn on the notification bell so you don't miss any of my future uploads. Alright, let's get started. What is Iguana Strategy? Iguana Strategy is a combination of 4 common investing strategies that suit most investors. These are A. Value investing. B. Growth investing. C. Momentum investing. And D. Dollar cost averaging. Let me explain each of these strategies briefly and how they work together in Iguana Strategy. A. Value investing. Value investing is the practice of buying stocks that are undervalued by the market. This means that the stock price is lower than the intrinsic value of the company, which is determined by its earnings, assets, growth potential, and competitive advantage. Value investors look for companies that have strong fundamentals, such as consistent profitability, low debt, high return on equity, and stable cash flow. They also look for companies that have a competitive edge in their industry, such as a loyal customer base, a strong brand name, or a unique product or service. Value investors are like treasure hunters who look for hidden gems in the stock market. They search for companies that have strong fundamentals, such as earnings, assets, and dividends, but are undervalued by the market for some reason. Value investors believe that the market is not always efficient and sometimes misprices these companies due to irrational factors, such as emotions, trends, or biases. Value investors think that this creates an opportunity to buy these stocks at a bargain price and wait for the market to correct its mistake. They have a long-term perspective and are not swayed by short-term fluctuations or fads. They are confident that the market will eventually recognize the true value of these companies and reward them with higher stock prices. Therefore, they buy these stocks when they are cheap and hold them for a long time until they reach their fair value or even higher. Some examples of famous value investors are Warren Buffett, Benjamin Graham, and Charlie Munger. These investors have made a fortune by following the principles of value investing and picking stocks that have delivered consistent returns over decades. B. Growth investing. Growth investing is the practice of buying stocks that have high growth potential. This means that the company is expected to increase its earnings, revenue, market share, or customer base at a faster rate than the average company in its industry or the overall market. Growth investors look for companies that have innovative products or services, disruptive technologies, or expanding markets. They also look for companies that have strong leadership teams, visionary founders, or loyal fans. Growth investors are like explorers who seek new frontiers and opportunities in the stock market. They search for companies that have a competitive edge, a unique value proposition, or a loyal customer base. They are not afraid to take risks and invest in unproven or emerging sectors. They are optimistic about the future and believe that these companies will continue to grow rapidly and dominate their industries in the future. Therefore, they buy these stocks when they are still relatively unknown or undervalued by the market and sell them when they reach their peak or become overvalued. Some examples of famous growth investors are Peter Lynch, Philip Fisher, and Cathie Wood. These investors have made a fortune by following the principles of growth investing and picking stocks that have delivered exceptional returns over time. C. Momentum investing. Momentum investing is the practice of buying stocks that are trending upward and selling stocks that are trending downward. This means that the stock price is moving in a certain direction with high volume and speed. Momentum investors look for stocks that have strong price movements based on technical indicators, such as moving averages, trend lines, or chart patterns. They also look for stocks that have positive news catalysts, such as earnings beats, product launches, or analyst upgrades. Momentum investors are like surfers who ride the waves of the stock market. They search for stocks that have high momentum, which means that they are moving fast and consistently in one direction. They are not concerned with the fundamentals or the valuation of the stocks. They are only interested in the price action and the market sentiment. They are agile and flexible and can switch positions quickly when the momentum changes. They believe that these stocks will continue to move in the same direction until they lose momentum or reverse course. Therefore, they buy these stocks when they are rising and sell them when they are falling. Some examples of famous momentum investors are George Soros, Paul Tudor Jones, and William O'Neill. These investors have made a fortune by following the principles of momentum investing and picking stocks that have high momentum and strong trends. D. Dollar cost averaging. Dollar cost averaging is the practice of making regular investments in the market over time. This means that you invest a fixed amount of money at regular intervals regardless of the market conditions. Dollar cost averaging helps you reduce the risk of timing the market and buying at the wrong time. It also helps you take advantage of market fluctuations and buy more shares when prices are low and fewer shares when prices are high. Dollar cost averaging is like a disciplined and patient approach to investing. You don't try to predict the market movements or chase the hot stocks. You simply stick to your plan and invest a fixed amount of money every month or every quarter. You don't let your emotions or impulses influence your decisions. You trust that over time, your average cost per share will be lower than the market price and you will benefit from the power of compounding. Dollar cost averaging works best for long-term investors who have a diversified portfolio of stocks or funds. It also works best for investors who have a steady income and can afford to invest consistently without affecting their budget. Some examples of famous dollar cost averagers are John Bogle, Jack Dorsey, and Mark Cuban. These investors have used dollar cost averaging to build their wealth and achieve their financial goals. How I applied Iguana Strategy. Now that you know what each of these strategies are and how they work individually, let me show you how I combined them into one powerful strategy that helped me turn $1,000 into $100,000. Here's what I did. Step 1. I started with $1,000 in my brokerage account. Step 2. I divided my money into 4 equal parts, $250 for each strategy. Step 3. I used value investing to buy 4 undervalued stocks: Apple, AAPL, Coca-Cola, KO, Bank of America, BAC, and Walmart, WMT. Step 4. I used growth investing to buy 4 high-growth stocks: Amazon, AMZN, Netflix, NFLX, Tesla, TSLA, and Shopify, Shop. Step 5. I used momentum investing to buy 4 trending stocks: Zoom, ZM, Peloton, PTON, Moderna, mRNA, and Square, SQ. Step 6. I use dollar cost averaging to invest $100 every month into an index fund, Vanguard S&P 500 ETF, VOO. I held all these stocks for 5 years without selling any of them. I reinvested all dividends and capital gains back into the same stocks or funds. I ignored all market noise and focused on the long-term performance of my portfolio. How much did I make? After 5 years of following this strategy faithfully, here's what happened. My value stocks increased by an average of 150%, Apple went up by 200%, Coca-Cola went up by 100%, Bank of America went up by 150%, and Walmart went up by 100%. My growth stocks increased by an average of 500%, Amazon went up by 400%, Netflix went up by 600%, Tesla went up by 800%, and Shopify went up by 700%. My momentum stocks increased by an average of 1,000%, Zoom went up by 1,500%, Peloton went up by 800%, Moderna went up by 1,200%, and Square went up by 700%. My index fund increased by an average of 100%, Vanguard S&P 500 ETF went up by 100%. My initial investment of $1,000 grew to $100,000. That's a total return of 9,900%. What can you learn from this? I hope you enjoyed this video and learned something from my story. Here are some key takeaways from this video. A. Investing is not rocket science. Anyone can learn how to invest smartly and successfully with some basic knowledge and discipline. B. Investing is not gambling. You don't need to bet on risky or speculative stocks to make money. You can make money with proven strategies that work over time. C. Investing is not a one-size-fits-all approach. You can mix and match different strategies to suit your personality, goals, risk tolerance, and time horizon. D. Investing is not a get-rich-quick scheme. You need to be patient and consistent with your investments. You need to think long-term and ignore short-term fluctuations. E. Investing is fun. You can enjoy watching your money grow and learn new things along the way. You can also share your experiences with others and inspire them to start their own investing journey. Even in this time and place, it is still possible to turn $1,000 into $100,000 with the right skills, mindset, and patience. What's next? I hope you enjoyed this video and learned something new about investing from me. I love sharing my knowledge and passion for investing with you. If you want to support me and see more videos like this, please do me a favor and smash that like button and subscribe to my channel if you haven't already. It really helps me grow my channel and reach more people. Also, make sure to hit the notification bell so you can be the first to know when I upload a new video. I have a lot of exciting topics and tips to share with you in the future. Thank you so much for watching this video. You are awesome. This is Iggy from the Investing Iguana signing off. Until next time, happy investing.